Okay, welcome to the Personal Finance Common Bank Account Fees presentation lecture. Please make sure that as you go through this presentation lecture, you have the notes that go along with it so you can take notes and prepare yourself for upcoming assessments. All right, so when it comes to the banking industry and the way that we as customers do our banking, things have changed quite a bit over the last number of years. Let's compare how our grandparents have done their banking versus how we do our banking in the 21st century. So let's take a look at a comparison of how those different customers were able to do their banking during those times. Our grandparents physically had to go to the bank in order to get cash, make a deposit, and get a loan. And in order to make sure that the balances of the accounts were accurate, had to manually determine those balances. Quite a bit different from the 21st century banking that we are accustomed to today. We can get cash from ATMs, automated teller machines, as well as POS, point of sale purchases. We can take a picture with our smartphone in order to make deposits. We can apply for loans online through a web portal. And we can find updated balances online 24/7, either through the web portal or through a banking app. So quite a bit different as technology has changed the way we as consumers do our banking on a daily basis. How do banks make money? Banks make money in two different ways. They either charge fees to their customers as long as if they are unable to operate within the structural confines of the financial institution, and they also sell services to their customers. So let's take a look at the two different ways that these banks can make money. Let's start off first with fees. Okay, so common banking fees that we might be exposed to: minimum balance fees, annual maintenance fees, overdraft and NSF fees, NSF standing for non-sufficient funds fees, ATM fees, lost card fees, and fees for closing an account. What we're going to do over the next number of slides is we are going to analyze the reason for the fee and the average cost associated with that fee. All right, so let's start off with the minimum balance. The minimum balance fee. This is a fee if you fall below a certain balance based off of what is indicated in the parameters of the account that you open. This could be a checking, a savings, or even a money market account. Could apply to any one of those accounts. And the average fee for that is about $12 a month. That's a minimum balance. Now, not to be confused with an annual maintenance fee, which is a little bit different. So a maintenance fee is a fee if you fall below a certain yearly balance on an annual time frame. Could be from January 1 to December 31. Average cost for the annual maintenance fee is about $150 a year. Now these fees, even though they are there and we may have to pay them, we can avoid them by doing our banking within the construct of what the financial institution is requiring of us. Now, other common banking fees would also include overdraft and non-sufficient funds fees. This is if we write a check for more money than we have in our account and would normally be charged anywhere from $30 to $45 per check written with insufficient funds. Another one is ATM fees. This is the fees that are charged to us in order to use the automated teller machines that are placed all over our communities. If we use ATMs associated with our bank, we can normally avoid these fees. However, sometimes we need the convenience of being able to get cash now, thus using ATM fees not associated with our financial institution, and we are charged fees because of it. These average around $4.13 per transaction. Now, other common banking fees: lost card fees. If we lose our debit card, we could get charged. And if we lose our debit card, we may get charged somewhere between $7.50 to $25 per card. We may also be charged for closing fees, which is closing the accounts and taking our money to different institutions. If we decide to do that because we have a new job, we're moving, or we just don't like the service provided, we could get charged up to $25 for closing those accounts. So all of these different fees are ways banks can make money. But here's the thing, is that you might not have to pay any of these fees if you're a loyal customer operating within the financial construct. Now, if you need to find a bank, how would you do that? What questions should you ask? What steps should you take? Well, the first thing that you should do is physically visit a bank or credit union. You can get brochures, you can get pamphlets on information on accounts, financial services provided, as well as being able to talk to tellers and get questions answered. You want to get as much info as you possibly can. Step number 2 then is to do your homework. After researching some of these institutions, find out which ones provide the services that you need and the services that you are most likely going to take advantage of. Because obviously then those are going to be the ones who are going to be the front runners as to the institution that you may select. Visit their websites. You may get an opportunity to see what kind of an online portal they provide. That might be something that's important to you. You might also be able to get chat feedback on the services provided by different financial institutions, and are their current customers happy or are they not happy? And then finally, step number 4, make the decision based off of your short-term and long-term needs. Find the institution that best fits what you're looking to accomplish in terms of your financial goals. Now, if we want to avoid bank fees, we can do this by using an online bank. If we do that, though, we want to make sure that it's FDIC insured. Any institution we want to make sure is insured, whether or not that's FDIC or NCUA, whatever the case might be. So whether or not it's an online bank or not shouldn't matter. Join a credit union. Credit unions are going to have different services other than banks. However, they may be limited to certain geographical areas, which is going to mean that there's going to be some shortcomings and there might be some fees that you may be unable to avoid because of the limited reach of that particular financial institution. Whereas if you went to a commercial bank, they might be nationwide. Number 3 is to change behaviors to avoid fees. As long as you can operate within the financial construct of what is being expected of a customer of a bank, you shouldn't have to pay any fees at all, or at least very little fees. Now let's take a look at banked or unbanked. What is your choice? 40 million Americans, believe it or not, do not have their money in a bank. Why is that? That's an interesting concept. Why would you not want your money in a bank in order to protect your funds? Some people don't trust them and thus keep their money in other areas other than a bank. What would you do in this situation? Would you bank or would you not bank? All right, let's take a look at some alternative methods to get quick cash. Walmart, believe it or not, maybe you don't know this, but Walmart offers customers the opportunity to cash certain types of checks: government, payroll, tax refund, cashiers, insurance settlement, and retirement. However, fees are charged in order to do this. They could charge $3 for checks up to $1,000, $6 for checks up to $5,000, and even $78 or above for each year if paid every 26 weeks. Other alternative methods are check and go. Brick and mortar banks such as US Bank, Wells Fargo, etc., they may cash checks for non-customers, but they're not going to do it for free. It's going to cost you about $10 to do that. You can also use check cashing centers such as Check and Go. Check and Go is going to offer a service allowing you to cash any type of check and will take 3% off of that check in order to provide that service for you. And believe it or not, the median household income is about $50,221. That means fees of $1,506.33. So a small percentage of a very large number becomes a pretty nice number indeed. That is how some of these places, alternative methods to getting quick cash, make money and provide customers with a service. Alternative financial services are rarely a better option and should be avoided by most people. So be careful when using them. They do provide convenience, but there's also some pitfalls involved with them. And if you can avoid them, you definitely want to do so. Okay, this concludes the presentation lecture for common bank fees. Please make sure to revisit the slides if need be so that you have accurate notes and you can use that as a preparation tool for upcoming assessments. I will see you next time we meet in class.